Well, good afternoon. Mark Milam here, your mortgage professional working on my quarantine beard, and I'm here with the this week's interest rate summary and market update. The interest rate summary will be fast and easy because it's the same one we had last week. The conforming conventional loans, the government loans, they look fantastic. Everything else, not so much, as we're dealing with the fallout from this pandemic and what it's done to anything other than a government loan or a Fannie Mae Freddie Mac loan. We've talked a lot about that in prior series. But what we really want to focus on today is the market update, because as of yesterday, April 16th, 2.9 million borrowers have availed themselves of the forbearance protections in the CARES Act. So if they have a COVID-related hardship, can't make their mortgage payment, they are relieved of having to make their mortgage payment for a period of time of up to 12 months. That's huge. We are talking about 5.5% of the active mortgage market that has already taken advantage of this protection. That's a big number. If you take the unpaid principal balance of all of those mortgages, you're talking about $651 billion. That's a massive number. And while I think we all applaud the government for the intent here, the devil is, of course, in the details. Because if the homeowner or the borrower is not paying the mortgage servicer, that doesn't relieve the mortgage servicer of the obligation to pay the ultimate investor. And so these mortgage servicers are now caught in a vice. And while Ginnie Mae, which handles FHA VA loans, has set up a relief fund for those servicers, no such protections or plan really exists now for Fannie Mae and Freddie Mac, at least not as of yet. And we're talking, as we move into the second half of April here, that Fannie Mae, Freddie Mac, conforming conventional loan servicers are on the hook for about $2.3 billion per month in principal and interest payments to the investors on these loans. That is simply not sustainable. Now, in the draft version of the CARES Act, there was a relief plan in place for these servicers. There was a funding solution in place for these Fannie Mae, Freddie Mac servicers. It got scrapped and removed from the final version of the CARES Act. So as of yet, very few details on how these servicers are supposed to make these payments. We'll be looking to the Treasury Department, to the Fed next week for some fine point solutions to these broad stroke problems, these unintended consequences of the CARES Act. So until then, if I can be of any service, please don't hesitate to reach out, 404-395-1102. Thanks.